Hello fellow traders, you are welcome to our YouTube channel, Online Forex Class. What we are dealing with presently is all about psychological errors that traders do make in the market that actually made them lose money to the market. And then we've started this psychological error a few weeks ago. The part 1 deals with knowing yourself. Part 2 also continue with that particular subtopic. And this part 3 now we are going to treat just 3 points, and then the rest of the points about psychological errors will be treated in the subsequent videos. The number one thing that actually comes to mind is going against your own original plan. What is plan? The plan we are talking about is your trading plan. Some of us, we don't even have trading plan, talk less of knowing how to go about it. Trading plan, actually, so many people may even confuse it with trading system, but they are two different things. Trading system is part of our trading plans. Trading plan is how to plan your tradings, your day, what you are going to do. If the market goes this way, this is what we do. If the market goes that way, this is what we do. This is how you start it. Step by step, arrangements, how you are going to be taking your trade, and if so that by the time this trading plan actually, is well embedded in your subconsciousness, you don't have to look at the paper anymore. All you need to do is, because you want to know what's next to do after a particular step you have taken. Then, so that original plan that you have is what is guiding you on what to do about your trading activities. So, but the problem we have now is because let's assume a trader actually opened a trade, and when you open a trade and you discover that the market is just going the other way around against you, instead of waiting to see what will happen next, because sometimes the market, if a particular trend is going a particular direction, and it is a must for that market to observe brief pause. So this pause is actually called retracement, which the market always observes after a prolonged movement. If at times it may soon occur after a short movement towards the direction. So that area actually puts fear into some traders' mind, and they don't know what to do again, and actually want to say that no matter what the market did after you had already opened your trade, if you had already observed everything as you are supposed to do it, you should not be on your toe. You should not be afraid. You should not allow fear to overwhelm you. If not that you have already, maybe you have overtraded, maybe you have taken a very big lot size, which is not consonant with your account balance, and you know that any further move against you, that account is as good as dead. So that actually, those are part of the psychological errors that makes traders to fumble in the market here and there. So once you have your original trading plan on ground and you are following it, don't change it after you have already opened your market. Follow the rest of the plan. Just wait, be patient, and let the market carry out what it wants to do. So if actually resorted to losses, fine. If it resorted to get profits as to your expectation, fine. But then these are also another way to measure your trading system, if it is okay for you to rely upon. Then number 2 is closing. When you are closing position to take profit before the set target. This actually happens when fear had already taken hold of you. Maybe previously you had already opened series of trades, and you experience serious consistent losses. So this actually will plant fear in you. So when you manage to open another trade again, immediately the market shows the signs of going against you, you quickly maybe the market had already gone into profits, and then at the middle the market now turns around and you look at it and say maybe this one also is going to give me losses. You quickly close it, but then it is not good enough, because when you look at it, if you want to stop this thing, all you need to do is just take the look at the past record, your trading activities. You will discover that you have so many small profits as against the bigger losses that are occurring once in a while, which will actually overwhelm and swallow up all those small profits. So if you can wait until the market hits your stop loss, there is nothing stopping you from waiting until your market on the price hits your set target. This is how you'll be able to measure your trading system, if it is okay for you or not. And then this is a good practice. Don't always think because the market actually moved a little bit and was coming back against you and you quickly close it. Do you know that at some moment in time, all those small profits you are taking is not even up to your stop loss? So at the time just one stop loss or two hits, you discover that it has already swallowed up all those small profits. So this is not the best way to trade. The best way to trade is after you have your original trading plan on ground and you already know how to follow your trading system per se, and you know that this trading system is working for you as how, as in, if you trade 10 times, your trading system is giving you is making profit for you maybe 6 or 7 times out of 10. That's a very good system. That is peradventure if you are going on ratio 1:1. But if you are going on ratio 1:2, meaning that the double of your stop loss is your TP. Even if your trading system is giving you 50% or even 40-60, you are still in profits. So those are the psychological errors that traders make in the market. Even the third one is by not closing a position in the hope that the price will revert in your favor. So this is what I used to do when this thing is happening to me. All I do is that I will go afresh back to the market, restart analysis again. So by the time I try to analyze as if this is a fresh trading system, trade signal, so by the time I analyze it afresh, I will know if the market that is going against me will actually reverse back and continue in my direction according to my expectation, or if maybe that direction is over and then we are having total reversal. So it is better for me to close it at that time, and then also that will actually shorten my losses as to what it should have been originally. Let's assume I have a 50 as my stop loss, 100 as my TP. So by the time I discovered that the market, by the time I entered into the market and did fresh analysis, I discovered that the market has gone back to total reversal. Then maybe the market has moved against me like 30 pips, and we close it as against my original 50 pips that I already envisaged or already taken as my what I can afford to lose. So by this I will have minimized my stop loss and my losses. Then we have to wait and let the market actually give me another trade signal so that I can analyze again and know when to go back to the markets. So all of those things put together, they are governed by greed and fear. Greed and fear we are talking about are those two byproducts or factors in human being. It is part of our nature. If you don't accept that these things are part of you, you are deceiving yourself as a trader. I'm telling you, although the levels, according to each trader's temperament, levels differs. But then, according just like if you are a choleric or a sanguine, the level of your greed will be more than the level of your fear, because most of these people, most of them are fearless. They are fearless, or the level of fear in them is considerably lower than that of their counterparts. So they are always very aggressive. They always go on operation take it all or lose it all, except they are willing to learn and adjust their ways. So if you are somebody who is phlegmatic or melancholy, the level of fear in them is more than the level of greed in them. Why? Because they are the type that ought to always procrastinate. They always want to wait and see. Well, most of them are perfectionists. They want to see perfect plan, perfect way before they can make decision in everything they do. So this actually affects them also in the market. So although each of these temperament has its own advantage and disadvantage, but once you know your weakness and your strength, you should be able to capitalize on your strength, and then on your weaknesses try as much as possible to work on it so that it can benefit you also. So I told you that once every one of us we have the presence of greed and fear in us, all we need to do is balance it up. When you balance it up, you allow your fear to do things moderately, to moderate your way, your greed, moderate your greed, so that it will not take advantage of you. Then moderate your fear so that you will not always miss a lot of opportunities in the market. Fear can make you miss big move in the market. Fear can also make you lose a particular trade. Fear of not wanting to lose that trade, and you did not close that in the hope that the price will reverse in your favor. It is part of fear in you, fear of not wanting to lose that trade. You don't want, maybe you have been experiencing incessant losses, and then you still keep your hope that anyway I will still make up my money, I still make it up, but then you now see that the present one is also going the way of the previous trade, and fear grips you, especially when you had already invested so much in that trade, which is not supposed to be. Forex trading is a marathon, not a 100-meter dash. All you need to do is make sure that let there be observe risk control. Let there be risk control. Don't be so greedy that you want to take all at a go. No, in business you have to consider risk, control it, and make sure that when you continue to trade, you cannot justify whether you are a profitable trader or losing trader by just one trade or two. After series of trading, at the end of the month or at the end of the day, at the end of the week, when you look at all your history, and you discover that at the end of the week, or at the end of the month, or even at the end of the year, you have excess profits in your in your trading, on top of your trading balance. That means you have made progress, you have made profits. But because most of us, what we are using to trade is so much small, that we want to make something small and something big out of small account balance, which actually does not favor most of the market, most of the traders. So all you need to do is make sure that because by the time you even get that big money to trade, the way you are trading with small money is the same way you will trade with big money, and you will discover that you are not making headway. You are just losing your money, the money you have just funded into your account balance, and you discover that in a week or two everything is going down and down instead of increasing. It is as a result of psychological errors in the market, and that thing that is dwelling in you, that fear and that greed, that is actually pushing you. Sometimes the fear and greed, they are so funny that the way they operate, sometimes you will see a trade that will give you profits, but the fear will not allow you to give to you will just say, okay, let me just try it, this small loss size, you put it and you wait, and the thing gives you good profit, and you look at it, what if I had already put my usual loss size? I would have made a lot of money and recoup back all my losses. And then by the time you now make up your mind and say, okay, let me close this one and increase my loss size, you now discover that the market will now move against you and give you more losses. No, those are the things. Those are psychological errors. It's not supposed to be. You must be consistent in whatever you are doing. And the reason is that you don't have trade plan put on ground, or rather you have a trading plan but you are not following it the way it should be. So one day we get to teach about trading plan, because it's very, very essential. It is very, very important for every trader to have a trading plan. So now here we are. So that not to make this video so long, we are closing it up here today. So by the time we come back for part 4, we have some other points also that we are going to discuss. If you have any question, try as much as possible to ask me in the comment section. Like this video, share it. Then to all our subscribers, those who had already subscribed to this video channel, I want to say thank you so much. God bless you. For those who are yet to subscribe and you are here watching us, please try and subscribe, because when you subscribe, what you are doing is that you are telling us that you are getting value in what we are doing, and you really appreciate it. And then you are also telling us that we should continue to do what you are encouraging us, that yes, continue to do it, like it, share it, so that YouTube will be able to recommend it to other traders like you who need one or two things to add to their trading career to make it flourish. So as we go forth, continue further in this very week, I pray that the light will shine on our way, and green pips will be full. We fill our pockets, and then our account balance will grow more than this at the end of this week, as we follow and as we learn and as we grow and as we apply everything that we learn in order to grow and be more profitable. Thank you so much. See you next week. Bye bye.